Welcome to my 10 lessons I've learned from investing in small cap stocks. Lesson number 8, strategy. Now, the definition of a strategy is this: a plan of action designed to achieve a long-term or overall aim. So what's your aim? Mine is to make money. And I realize the best way of making lots of money from a small amount to start off with is small cap stocks. And that's why I sort of gravitate towards them, because, listen, you can start off with a small amount of money and you can make lots of money in small cap stocks, but there's also the chance of losing money. So I realize, it's basically, like I've always been saying, it's big risk, potentially big reward. But I realized, I needed a strategy to enable me to capture those big rewards but avoid those big losses. So 20 years ago I started investing pretty much, and I always dabbled in small cap stocks, but I wasn't really choosy over size of company. I didn't really know what I was doing, but I was more into bigger cap stocks, And then I started doing the podcast, interviewing CEOs of small cap companies, and I used to look at the charts and think, wow, that company has done treble, 3 times, 4 times, 5 times its initial, share price in the last couple of weeks. And so I started to gravitate towards small cap stocks. And when I first started, I was losing money. And I hated it. I thought, what's going on here? There's got to be a way of earning money. I'd either get in too late, I'd see the share prices rising, going through the air. I didn't understand it. I thought, well, people are making money doing this, surely. I mean, there must be, otherwise it wouldn't be a market for this, unless they're lying. I mean, a lot of people do lie about, a lot of people like to talk about the winners and avoid their losers. But I started making losses. And I realized, I was making losses essentially because, quite simply, I didn't know what I was doing. And I'm just following other people's tips, on Twitter and stuff like that. Or this guy knows a lot, let's follow him. And I didn't know if he's telling the truth or not. Some people I've followed since turned out to be not telling the truth. But anyway, I started doing my own research, and I started looking, how do I value a company with no revenue, no profit? Because I used to, look at bigger cap stocks that had profits, and so you could, look at earnings per shares comparisons, or their PE ratio, price earnings ratio, and you could look at their profit before tax, and value them on multiples of that. But with small cap stocks who are pre-revenue, there's none of that. So how do you value them? And I took it down to the basics. I basically started looking at the balance sheets, see how much cash they had, see what assets they had, the potential of their assets, compared to where they are now. And I think, I started doing more of this, getting better with it. And then all of a sudden I had I doubled on one stock, one small cap stock. I doubled, it was close to triple, but I sold out. And in fact, it ended up 5 bagging. And then a while later, I was chatting to a company on the podcast. I realized this company has a lot of gas in the ground. I think it was Cent Resources, it was. A lot of gas in the ground, and yet they're valued at something like 2 million market cap. That's ridiculous. So I started asking around, how much is 4, 5, 6 BCF? How much is that worth? And then, so I basically just invested. And I was on holidays, and we were in a yurt camping. The kids wanted to do that. I hated it. But I had limited internet access, and it went bananas. It went crazy. 3, 4, 5, 3 bagged, then 4 bagged the next day, which went nuts. And I couldn't really sell as quickly as possible. I didn't have any internet access properly because my stockbroker didn't have an app. And so I was quite late to sell it. But it did me a favour not selling too quickly because I basically 5 bagged on it. And I did really well. And then I did some more research on another small cap company. In fact, it was Bushveld Minerals. And I invested in those. And my initial research was quite good, I thought. I did a lot of research, reading on vanadium and all this stuff. But it didn't go anywhere. And in fact, it went down about 20%. And I was down 20%. And I sold. And then it became a 10-bagger. I thought, what is going on here? So, but I looked at these companies. I thought, well, on that one specifically, my initial case for investment was very good. It's just the share price doesn't always reflect that at the time. And it may go down, it may weaken. So I realized I needed a strategy to deal with this, to deal with the losses you take if you invest at the wrong time, because timing is very hard. Again, the right price is very hard. Your research may be good, but your timing may be off. So I thought I need a strategy. And I looked at these companies. I realized, first and foremost, they all have certain characteristics, and that is they are small cap stocks. I said in the previous video, if you want, big performers, you look under 20 million, look under 10 million. Look under 5 million. That's the big movers. That's where they are. And I also realized that they had other criteria that they all had. And that was that their assets, for example, could generate, pretty much 10 times the value that they're currently valued at. Yes, there's risk there. Of course there is. And there was other things that certain companies had as well, like they had a small free float, the management had skin in the game. And so there's lots of things I looked at that losers had and winners had. And I sort of, bunched all these together. And this is why I came up with the cash model I researched. So it's up above my desk. It's CCASSSH. That stands for capitalization chart, assets, shareholders, significant milestone, simplicity, head honchos. And I'll do a series of videos on those specifically. But I didn't just come up with these, acronyms because I thought it'd look cute and it was easy to remember. I came up with them through experience, and through winning and losing on stocks. That's what I come up with. It's through looking at companies that have won and what have lost and looked at their traits. And that's why I've come up with that. So that's my strategy. And it's not only about that. It's like I said with Bushveld Minerals, is knowing when to buy, and how to buy. If a company sort of drops by 20%, if the story hasn't changed, should you buy more? Because I missed out on a 10 bagger on Bushveld because I just sold out at the wrong time, So my advice to you is to get a strategy based on your experience and hone it to achieve your overall goal, which is to make money, So this is what you need to do. This is your homework, okay? Look at previous investments you've done. Look at them all as much as you can remember. I know sometimes, your thoughts of perception may be warped by what has happened and what's happened now, but as accurately and as unbiased as you can be, write down what went wrong if you lost money in the stock, or what went right, if you got it right, if you made money in the stock. Write them all down. Think, okay, why did I make money on this company? Or why did I lose in this company? What was the size of the company? What sector it was in? Did it have enough cash? Did you fear the price? Did you jump in at the price because you feared missing out because the price was rising? Did you put too much in? Did you not do enough research? Or did you listen to somebody else? Or did you, so put all these things down. Analyze as much of your previous investments as possible, and then see which ones worked out, which didn't. And jot those traits down of the company that's worked for you, because you find you will become better at investing if you get a strategy you're happy with and try and stick to it. It's one thing having a strategy. Even now, I have a strategy written down and I'm doing a video series on it, and I still stray every now and again from my strategy, and I sort of know when I'm doing it. This is not going to pay off, but it's hard. It's a hard thing to do. So all I'm going to suggest to you is take a bit of time and come up with a strategy. Because this strategy will give you three things. First and foremost, it should help you, or it should do this. It should help you limit your losses. It should help you maximize your gains. That's gains. And it will save you time. I mean, I know within seconds, sometimes within minutes, if it takes a bit longer, if a company is worth me investing in. I know straight away. I have a set of filters I look at, and if it hasn't got this, or that, then I should just not bother with it. And it'll save me a lot of time, So, get a strategy. The sooner you formulate a strategy, you become a better investor. I guarantee it. I guarantee it. There's a well-known saying, if you don't have a plan, you become part of someone else's plan. And if that person doesn't have a plan, then you're basically sitting in a boat in the middle of a volatile sea with no rudder. Okay, so, and also the person you're getting tips off may be lying about their performance. Ask them. If you are regularly using someone to get tips off, ask them about their honest performance. If they're not telling you, they're hiding something. But in the end, it comes down to you. You press the buy button. So get yourself a strategy that you can count on. It'll also give you peace of mind. I hope that helps. By all means, like, share, comment, ask any questions if you could. And don't forget, voxmarkets.co.uk/app. It's a free app. It's cracking. You get RNSs straight to the front screen of your phone. Just follow a company. Whenever they release significant news, you get that free within seconds. And by all means, subscribe if you could, because I've got another couple of videos on this series, but I've also got another series planned, and I intend to do more stuff on video. So I hope that helped. Subscribe. Thank you very much. Thanks for watching. Subscribe. Thanks.